What's up everybody? Welcome to the Stocks channel. My name is Cory, and Friday in the stock market we continue to see the indices stuck in a trading range, and we're patiently waiting to see which direction the market wants to break out next. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so Friday in SPY we were up 0.45%, and we can see SPY is still developing that bull trend with all of these moving averages stacked to the bull side, and the price action does continue to close above all the moving averages. So without a doubt, in the short term we do have some bullish momentum. Now there is a caveat to that statement because we are below a negatively sloping 200 simple moving average, and we are very close to the resistance trend line that defines this bear market. So the bulls do not have an easy time breaking out from here. That is more than likely why we find ourselves stuck in this trading range between 390 and 400 as the market is consolidating, getting ready for the next leg in this market. Now we have gaps above and gaps below, with the gap above being at 408 and the gap below being at 381. So we do have plenty of time to trade the breakout in this trading range. We just need confirmation of a break in either direction. The bears need to break the support at 390 to get it down to close the gap at 381. And the bulls will need to break through this resistance at 400 and then blast through the 200 simple moving average to close the gap at 408. Now there is a scenario where the bulls could go up there and close that gap and then the bears show up. So do not completely write off the bulls, because the bears may want the bulls to push a little bit higher, and then they're going to attack with weaker bulls with less momentum and much better risk reward ratios, because we will be closer to that bear market resistance trend line. So in the short term, going into the holiday season, we could have low volume melt ups where we do kind of sneak up, get that bullish breakout, and then do close the gap. But I still do think you need to respect the fact that the bear is living right there at that level, and there will be very strong resistance between SPY 400 up to about 412. Now keep in mind that requires SPY to break above 400. So you're not getting bullish at resistance, you're getting bullish on the break of resistance. So wait for that break of resistance and make sure you're staying objective, because in the short term, this is higher lows and higher highs, which does mean we could continue to push higher in the short term. Now in the longer term, I do think we will close this gap at 381 and very likely test this critical support zone right around the high 370s. So longer term, we are still in a bear market, but shorter term, we could continue to push higher. So watch that range between 390 and 400 and then act accordingly when you see the confirmation in the breakout of the price action. On the NASDAQ 100 triple Qs, we were dead flat on Friday, going absolutely nowhere, and we are getting the price action closing above all of the moving averages as the triple Qs bulls slowly but surely tried to build this bull trend. As you can tell, the triple Qs do not have the bull trend of all of the moving averages stacked in the bull's favor, and they are also still below this negatively sloping 200 simple moving average, with the bear living right there at 293. So obviously we did get that rejection at the resistance, and we came all the way back down to the 50 EMA of support just below 281. So we are stuck in this trading range between about 281 to 293. The breakdown below 280 will send the bears down to close the gap at 268, and the break above 293 will send the bulls up to close the gap at 308 and test that negatively sloping 200 simple moving average. So play this range, because once we get the breakout, there will be a good bull trade or bear trade in either direction. We just need to wait for the confirmation in the price action. We're still considering this a bear market in the triple Qs while we're below the negatively sloping 200 simple moving average, so the bulls will need to get that bullish breakout above 308 to continue this bull trend. On the Dow Jones, we were up 0.38% on Friday, and we can see that Dow Jones is losing the bullish support trend line, and we are continuing to find resistance around this gap fill zone at 339. So it's very likely that Dow Jones is getting ready to roll over and come back down to fill this gap at 331, which is also going to be where that rising 20-day simple moving average is. So I do expect there to be very strong support around that gap fill zone. Now if the bears drive support down through 331, we'll very likely come back down to the 200 simple moving average of support, which is the zone at 325. So in the Dow, look for this rollover to come down to 331 and then below that 325. And the bulls will need to break above 339 to test the previous daily high just below 342. And if the bulls get the bullish breakout above 342, look for the gap close at 347. On the Russell 2000 IWM ETF, we were up 0.65% on Friday, and you can see IWM is getting that strong rejection from the resistance trendline at 188, and we're back down below the negatively sloping 200 simple moving average with a gap to fill to the downside at 178. Look for a rejection around this resistance between 185 to about 188 to come back down and break down through the support at 180 and fill the gap at 178. If the bears continue to push lower, there's going to be strong support at 176, And if the bulls lose all of that support, it's good night because we're going back down to retest the lows. So watch that strong resistance just above, and if the bulls do get the breakout, the next resistance levels will be 190 and then 195. On the ARKK ETF, we were down 1.51% on Friday, and ARKK is right back down to this support zone at 36.5, and I still do think we're coming down to fill the gap at 34. Remember, this is a very strong bear market, so there's no reason to believe that gap does not fill. So continue to look for resistance right around 38 to 40. Or the gap fill to the downside around 34. If the bulls do get the bull breakout above 40, then there will be another strong resistance just above at 43. So continuing to respect this very strong bear market in the ARKK. On the VIX, we were down 3.47% on Friday, and the VIX is closing back down below 24, which is going to increase the probabilities the VIX is trying to close this gap at 21, which is going to favor the bulls in the short term. However, once that VIX gap does close, I do think we're going to see another round of volatility in this market. So expect to see a volatile market while the VIX is above 20, more than likely continuing to bounce between 21 and 24 until we get a breakout in either direction. On Bitcoin, we're currently down 0.84%, and Bitcoin is building this very tight consolidation triangle, which is starting to look like a bear flag, but as you could tell, the volume is dropping off, which could be favoring the bulls for a bounce in the short term. We had high volume selling, which was some type of capitulation event in Bitcoin, and we were getting way too oversold around that support at 16,000, and we are seeing buyers stepping back in, and we are seeing volume dying off on the selling. Now, if we do get high volume selling yet again and lose that support at 16,000, then you'll be looking for the next downside price target at 14,395. However, in the short term with low volume selling and right off this support, it does look like we could get a double bottom breakout above 17,600 and then retest that breakdown of support as resistance now at 19,000. On Amazon, we were down 0.75% on Friday, and you can see Amazon continues to reject that resistance right around 97, and it's more than likely coming down here to fill this gap at 89.5. Below that, look for a retest at 86, and if we lose the support at 86, we do have another downside price target at 77. Watch for that strong support at 97 and 102. And you're not getting bullish until we can start closing back over 102, and then we could try to fill the gap at 110. On Microsoft stock, we were down 0.19% on Friday, closing right on top of the 50 EMA of support at 241 and just below the resistance at 242. If we break down below this support, look for a retest of the breakout at 234.5. And then below that, the bears are going to be trying to fill this gap around 228.6. Upside resistance breakouts will be 242, 247, and then strong resistance at this risk level at 252. And the bull breakout above 252 should take the bulls to fill the gaps in the 260s. On Nvidia stock, we were down 1.71% on Friday, and we continue to see Nvidia correcting this vertical move to the upside, and we're back down below the critical support at 156, which is significantly increasing the probability the bears are trying to come down here and fill the gap at 142. Look for strong support from the bulls at 142, and if we break down below that, look for a retest of support at 133. On Tesla stock, we were down 1.63% on Friday, and we see Tesla coming back down to retest the previous closing low at 177, and I continue to expect Tesla to get to our price target at 173. If we continue lower, we have one more price target to the downside at 163.2, but I consider all of this very strong support, and I do think from these levels we will see a very strong bounce in Tesla, which could easily take us back up to 205 and possibly even 230. On Apple stock, we're up 0.38% on Friday, and Apple is closing back over 150, but still below the negatively sloping resistance trendline at 152. The bulls need to break 152 and then get back over 156, and then they should have control to push Apple back up towards the resistance trendline. Downside critical support levels will be 150 and 146, because if we lose that critical support, we're coming all the way down to fill the gap at 138. On the financials, we're at 0.83% as the financials continue into the bull trend, but they do have the gap to fill to the downside at 34.3. The industrials were up 0.74% on Friday, still building a strong bull trend, but also still have the gap to fill down here at 97. The healthcare sector was up 1.21% on Friday, back over the resistance at 134 and still building a strong bull trend. The energy sector was down 0.79% on Friday, losing the support trend line and the support level at 92, but still closing above a rising 20-day simple moving average at $91. Stay bullish as long as we're above 91, but if we break down, we could be coming all the way back down to 89. So jumping back over to the S&P 500, this is going to be a very low volume holiday week, but that does not guarantee that we cannot go lower, but it does favor a low volume melt up scenario. So don't rule out the bulls in the short term. Longer term, we're still in this bear market until we see the decisive breakout in the price action above the critical resistance zone. So continue to watch this trading range in SPY between 390 and 400 and be ready to trade in either direction once we get the breakout. Remember, have a great trading plan with great risk management and stay disciplined, and you're going to do just fine in this volatile market. Also, don't forget to take advantage of the Black Friday special deal off Bank Trade Alerts, where you can get 50% off 2 months of Bank S Plus or BANC. All you need to do is apply the coupon code Black Friday at checkout. BANC is absolutely crushing the market, beating all of the indices, including the TQQQs and the SQQQs, which is the only thing BANC trades. So take advantage of this special Black Friday deal now and try out BANC if you haven't already. And keep in mind, this is a limited time offer that will be expiring at the end of November. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.